How are we getting on, guys? Welcome back to the Trading Couch with myself and Luke. Today we're going to be talking about should you get funded in trading.
Yeah, so we've got a set of questions that we are going to ask each other, and then we're going to talk about our views, so my views on the topic and James's views, and just speak between us. So I think the first one is, what is being funded? What does it mean to be funded in Forex?
I feel like most people should probably know by now, but obviously if you're new to the whole Forex scene, it's pretty much the idea. It's like a prop firm idea, but online, and it's a third party. So you go to a website. I mean, there's many companies out there, not plugging any of them, but you can go to a website and basically you pay an upfront fee, which is usually like a few £100, few $100, and then they will give you a large equity funded account. So I think the most common ones is like 100,000, 200,000.
Yeah. I mean, with some of them. So there's a few in London that you can go to where you would pay a fee, like James has just said, and you would be funded. But then there are others out there, more professional ones, I think personally anyway, that you actually have to do a test and you have to pass the test. So that would be a case of building the equity on a demo account and not going into too far of a drawdown.
Long story short, it's just an opportunity for you to have a high equity funded account to trade from. Now, what is actually the pros and cons of this? So to start off with, of course, having higher equity means that you can make more money. But on the flip side, you have to be a good trader. Otherwise you'll lose the account, lose the deposit, so on and so forth.
Exactly that. Yeah, I mean, having a funded account, in my opinion, I don't agree with, but we'll dive deeper into that later on in the video. But yes, having a funded account, like James said, means that you have more equity to trade with. In turn, you can obviously, assuming you're risking 2% per trade, or you have your risk management in play, your potential returns is going to be a lot higher than, say, a £500 account. If you had a £100,000 account trading 2% risk, and then you had a £500 account trading 2% risk, that £100,000 account is going to give you a better return than a £500 account. So that's the main pro I think I see in all of it.
You're making 2,000, whereas you maybe would have made 20 quid.
Exactly that.
But the downside is you only keep a certain percentage. I think that deviates from firm to firm, but it usually keeps 70-80%.
Yeah, it's about 80%.
Which is great, don't get me wrong, like keeping 8%, that's still 1,600. So I mean, it's a lot, but I think, as you said, it's just the cons stack up in terms of there's all these parameters you have to keep following. It's different with each prop firm, but a majority of them, it's like, don't lose more than 4 or 5% a day or you lose it. You just lose it, that's it.
Yeah, that's the only, I mean, that is one of the annoying things with these funded accounts. It's like, if you make one up, if you had your own account and you went into a 5% drawdown, it doesn't mean your account then gets closed and you can't use it anymore. That account is still there. But with a funded account, if you go into too much of a drawdown, they will just close your account. All the profits that you've made on that, you're no longer eligible for. Same with the deposit that you put in place, the cost of the trial period and the test that you had to take part in, you don't get any of that back. It's a very strict process. So, I mean, depending on your strategy, I know for my strategy at least, it wouldn't work for me. I place trades all the time that go into a drawdown, which is more than normal. Things have to take place, patterns have to be put in the market, so it's expected. But yeah, I mean, if you have a specific strategy, a very strict one, where your positions very rarely go into a drawdown, I think you'd be okay. But if you have a looser strategy, a more traditional look at trading, then it's not going to work out well for you. I believe you're just wasting money going through that process, wasting money and time to then just lose it anyway. But I mean, for your strategy,
I mean,
probably work out perfectly.
It's good just because it allows you to actually make a living from Forex. I mean, the biggest misconception is there's potential to make a lot from it, but you have to build that up and work that up through compound interest. Like, a lot of people think I'll come in, triple my account size, and that's not how it works.
Yeah.
It's just consistent percentage profits week on week on week, which if everybody goes online now and you go into a compound interest calculator and you just imagine you're making 10% a month, which is, if you're a good trader, that's quite low. 10 to 20% a month. You put in just any starting account size, £500, 1,000, and just see how much that increases over a year, 2 years, 3 years, and you can make that 500 6 figures. And at that point, that is when you'll be like, I'm pretty confident I can make a living. But the funded accounts just get rid of that process.
Yeah.
From having to compound up and up, and it gives you that opportunity to potentially get years ahead. But of course, you have to do it when you're at a point in your career that you are successful and you have proven consistent profitability, because as we know, market conditions change all the time. You might be amazingly profitable 1 month, 1 season, the next season completely the opposite. We know over Christmas, the markets were extremely difficult to trade.
Yeah. I mean, I had trouble trading coming into the new year. Yeah, I experienced the markets, and I traded the markets like that, and gone into the drawdown that I did on a funded account, they would have closed it down. You know what I mean? So thankfully, I never went down that process. I did go down the process of just compounding my own funds, reinvesting my own profits and my own money. Yes, it was a long process, but now at the point that where I'm at, I can comfortably live on the money I earn. So I mean, it's one of them. It's like you either go the quick route or you go the slow and steady route. You know what I mean? But if you go the quick route, then there's still an off chance that can just be taken away from you at any point, and then you're back to the slow route, starting from scratch again. You know, but if you can stay funded and you can stay successful with the majority of your trades and avoid going into too much of a drawdown, then those profits could actually be used to fund your own account. You know what I mean? So, you know, you could, if you had a £100,000 account and you made 50 grand from it in a few months, happy days. You could then use that 50 grand, put it into your own trading account, and then close down the funded account and just go from there. So there are processes and ways of going about it. I just believe, I don't know, I like to work from the bottom up. You know what I mean? That's just how I've done things and how I do things. So.
Yeah, I mean, I'll actually dive into my thoughts on it. So I do believe in it. I think it is a great step to take. It just depends on your goals. So I think if you're going to do it, you need to be able to dedicate a pretty decent set of time to just go at it, looking at the markets constantly, trading them constantly, building up that profit. And it's good because it just allows you to make a living from trading. It allows you the opportunity to get good profits from the skill that you have, because the hardest thing is becoming a good trader, which is hard enough in itself, years of experience. But then on top of that, right, how can I convert this into me actually making a lot of money?
Yeah.
And I think funding for me is a great step in that direction, because you can then use the fact that you are a good trader to bring the profits in that you probably desired from the second you heard about Forex. So I think it's good. Obviously it's strict. Some prop firms stricter than others. I know some of them don't let you hold over the weekend.
Yeah.
Some have requirements for stop losses, take profits, risk percentage. You know, if you don't play something, I think maybe within a month it gets taken away from you. So it's just these little things that you've always got to be conscious of.
I just don't feel like it's realistic, because what happens then is, for me personally, as I've compounded my account slowly, I've got used to risking more and more of my equity.
Yeah.
I think if you go from risking 2% on a £500 account and it's nothing to you, then that's great. And then if you are then given £100,000 worth of money to trade and you are losing £2,000 per trade, that is going to fuck with your psychology like nothing else. Yeah. Doing it legitimately and compounding in a way where you are building your equity slowly also builds your psychology and builds the way of trading. I think
it's just a natural journey that you put yourself through, isn't it?
Exactly that.
You're skipping out on.
You're skipping out on so much. I don't know. I just feel like it's. I don't know. I mean,
I feel to you, there's sort of that sense where it's like not cheating, but
yeah. No, it is
like,
definitely.
Yeah, it's like that feel of like now I'm going to make it myself, and
yeah,
you know, obviously that's a great mindset to have. So I guess it's just where
I just
everybody has
think,
different views on it.
yeah, I think it's just like I think everyone has to take that journey. Like I've got friends in this industry all across the world, and I've spoken to a lot of them about having funded accounts. A lot of them have tried to have funded accounts and have quite simply disregarded them. They might have gone through the process and they've traded, and their accounts have been closed down and they've just gone back to trading normally. Yeah, I mean it's each their own at the end of the day. Some people want that shortcut, that get rich quick, if they believe that they are competent and capable enough of trading an account that size. But when you actually go to trading an account that size, I think you quickly realise that it's a whole different ball game. Genuinely, like
100%.
genuinely.
As you said, like even if you just place the trade and it's like you check it an hour later and you're like, oh my god, £1,000 minus, like, and it's just it's different. Even when you think that I'm on lock, I've got this on lock, like it isn't. It's just like everything in trading, no matter how good you think your psychology is, like new things will just throw you off.
And it is such honestly, like it is such a shift.
Yeah.
From risking £20 per trade to potentially £2,000 per trade. It's very scary to see, genuinely. And then when there are so many rules and restrictions in place, that has another knock-on effect and impact on your emotions and your psychology.
I think the thing you're missing out as well, like yes, the drawdown's one thing, but imagine seeing you place an amazing trade, you're like, oh my god, 10,000, like in profit, you're like, let me just secure this, I've got 8,000 there, easy. Like you imagine right now you've got a trade that's doing amazing, and you're seeing, right, it's a £10,000 profit, I could just take this out now, 8,000 to my name, easy.
Yeah.
Or you could just let it keep running and take the risk that you know you're not going to get £8,000 tonight, but you could potentially get more, potentially get less. It is.
Yeah. There is that side to it as well, definitely. I mean,
you just need to be at a point in your career where everything's stable. You've got a routine, so it's literally once you get yourself funded, it's another day in the office. Everything's the same. It doesn't throw you off. So at the end of the day, my opinion is, it is for select people, and for those select people, it can be a great boost in the journey.
No, 100%. I mean, yeah, it's each to their own. I think it's with a lot of things in Forex. It suits some people's needs and it suits some people's style of trading and not others. So it's as simple as that.
Just make sure you are profitable already and have proved to yourself that through different market phases, and B, you have the consistency in your life to ensure you can abide by the rules set and actually profit from it.
No, definitely. I don't think anyone should be touching a funded account or even trying to get a funded account unless they have seen profitable trades throughout and being consistent for a considerable amount of time.
Yeah, so I hope we've managed to help you in the decision if that was something you were thinking of. But regardless of that, thank you for joining us on the Trading Couch. We'll see you back here again in 2 weeks' time when we're talking about another topic.